Hey traders, and welcome to the 20 EMAR bullish strategy tutorial. Here are the rules for this strategy. They are extremely simple, even more simple than the rules for the previous 50 EMAP strategy we just looked at. So our first rule is price must break above the 20 period moving average, or the 20 EMA. So for this strategy, you will need to get out your 20 EMA by going to indicators, typing in EMA. It is an exponential moving average. Click it and ensure that you're set to 20 periods on the EMA. Just as with the other strategy as well, we will need the ATR indicator on the chart for this one set at 14. So with that being the case, now you know what you need on your chart. The rules of the strategy is we need price to break above the 20 period moving average. This 20 EMAR strategy is a reversal strategy. That's actually what the R stands for in 20 EMAR. This is pretty much 20 EMA reversal strategy. So what we're using this for in the optimal situation for a trade is when price has been pushing lower for a while, and then we get a break of the 20 period moving average, we're seeing that as a possible reversal. So right now we have conditions in place for a reversal because buyers have been able to push price higher than the 20 period moving average. After we get that, we start counting candles. The count starts from the most recent candle that closed above the 20 EMA. So what I mean by the most recent candle that closed above the 20 EMA is not this candle. Yes, I know this candle is a recent candle that closed above the 20 EMA. I mean the most recent candle in which the body of the candle touched the 20 EMA and it still closed above it. So that would be this candle. So in the case of looking for this, we start our count not from this candle, because after this candle we get to close below the 20 EMA here. We get another candle below the 20 EMA, then we get to close back above the 20 EMA. So this is where our count starts. That is important because what we're doing is counting 10 candles after this one. This candle would be 0. Our candle starts right here. Excuse me, our count starts right here. And our count starts there, and we're going to look for 10 candles. And I'm not going to count all the way to 10. You guys know what it looks like to count to 10. We're going to look at the first 10 candles after our most recent candle that closed above the 20 period moving average. And what we're looking for in those 10 candles is a 38.2% candle. So the entry candle that we looked at towards the beginning of the course in the Technical Analysis Mastery course, we looked at the 38.2% candle. That is our entry reason for this strategy. So let's go ahead and push the market forward. Does that look like a 38.2% candle? Well, we can easily take a Fibonacci retracement and see that it is. Remember, for a 38.2% candle, we just need to ensure that the entire body of the candle is above the 38.2% retracement. So going over those rules really quickly one more time, because they're super simple. We need price to break the 20 period moving average. We then start counting after the most recent candle in which the body of the candle touched the 20 period moving average, but the candle itself closed above the 20 period moving average. This is our 0 candle. We start counting directly after that with 1, 2, 3, all the way up to 10. And as long as within 10 candles, considering this was the second candle, means it's valid. But as long as we get a 382 candle or 38.2% candle within the first 10 candles, that's our actual entry. So in this case, our entry would be the close of that candle. For our stop loss, as you can see right here, our stop is 1 ATR below the entry candle. So at the bottom of the entry candle or the swing low, we're going to use 1 times the ATR indicator below that low. At this point, the ATR was 21 pips. So we go down to the low of 17. 17 plus 20 would be 37 plus 1 would be 38. So we have 38 pips on our stop loss. And for the purpose of this video, we're just going to do a 1-to-1 reward to risk because you're just now learning the strategy. This would be our trade setup. Now let's see how this trade plays out. Then we'll discuss some of the other nuanced rules. As you can see, this trade pushed up and eventually hit our targets quite easily. Now, the next rules are the count starts over every time we get to close above or below the 20 period moving average. So to give you an idea of what this means, once we get a close back below the 20 period moving average, what I mean by that is this right here. As soon as we get another close below the 20 period moving average, we're going to start the whole process over. We're going to start counting again 0 from the latest candle that closes above the 20 period moving average, which is right here. This is the latest candle in which the body of the candle touched the moving average and it closed above the moving average. So with that being the case, our count starts over now. So let's go ahead and hit play and see if you can see if we have an entry. So this would be our 0 candle. We then have 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Within these 10 candles, we need to see a 38.2% candle in order to place a trade. Do we have that? No, we do not. So in this case, we don't have a trade. Even though we did get a close below and close back above, we have no trade there. And for our last rule, guys, I only take one trade at a time. So if I was to get another trade while in this trade, if another trade happened like right here, then I would not enter that trade. I don't enter into another trade until I'm either stopped out or hit targets on my initial trade. That's what number 6 means, is that I only take one trade at a time. So we'll go ahead and take a look at a couple of other examples of this just to be sure that you completely understand it. And then we'll go over the bearish version of this. And then after that, we'll go over a ton of examples to bury it deep in your head to make sure that you have a complete comprehension of how to trade this strategy. All right, so here we're going to take a look at a couple of other examples. And what I want to show you now is that we have this little thing called the measuring tool on TradingView. So if you're using TradingView, that's going to make this process a lot easier. So if we're looking down here, do we have a break of the 20 period moving average? Yes, we do. And it is on this candle right here. So this candle is going to be our 0 candle. With that being the case, if we just take this little measuring tool over here and we plot it on the very next candle, the 1 candle, remember this is 0, so the next candle is going to be 1, and we pull over, we can find the 10th bar as you see right here. Hopefully this stays on. Yeah, right here you can see 10 bars. So what that means is that if I just pull from this candle over and then stop when I see 10 bars, then I can see where my 10th bar is. At this point, I can just look in this area for a 38.2% candle. If I have one, awesome, I have a good trade. If I don't have one, that's totally fine. It just means we don't have a valid trade in this area. So that's a really easy way to actually count 10 bars without having to count them individually if you're using TradingView. So in this case, with this being the 0 bar, again, let's take a look at the rules. So with this being the 0 bar, what are we looking for next? Next, we start our count, right? Our count starts from here. So we would take that measuring tool, measure over 10 candles, and we would look for a 38.2% candle within those 10 candles. The entry candle also must close above the 20 EMA. That's something I didn't mention before, and that's why I do these tutorials, is so that I can catch myself whenever I mess up. So the entry candle must close above the 20 period moving average as well. So let's see here if we get an entry. We count over 1 candle here, 2, that I can tell that's not a 382 candle, guys. Then we have 3, 4, I can tell all these are not. 5, 6, oh, number 6 is a possibility. Probably not, but we'll go ahead and check it just to be safe. Here's candle number 6, and unfortunately, that's not going to cut it. Why? Because if we look closely here, we actually pull our line correctly from the swing low of the candle to the swing high of the candle, you can see that we have the body of the candle below the 38.2% retracement. Even though it's like barely even a pip below it, I still don't count that as valid. Literally the entire body must be above 38.2. If it's not, I do not count it as a valid trade. So those rules are set in stone, guys. With that being the case, we do not have a trade until we close back below the 20 period moving average. After we start closing below and we close back above, what happens? What does that mean for our strategy? Well, if you look right here, the count starts over with every close above or below the 20 period moving average. So at this candle, we would start the count for below the 20 period moving average. And then when we get back above the 20 period moving average with this candle, we start back over at 0. Then we have 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Out of these 10 candles, was there a bullish 38.2% candle? It should be pretty easy to tell at this point. There is not a candle that even has a long wick to the bottom side throughout here. So I know for a fact I don't have a trade there. I can just keep on moving. So as I keep moving here, as I keep moving, what happens right here? Right here, do we need to start the count over? Don't we start the count over every time we close above or below the 20-period moving average? Yes, we do. So with that being the case, now I can get out my measuring tool. Let's do it like this. We can start from, this was our 0 candle. So let me make sure you understand this. This candle, the latest one, that the body touches the 20-period moving average, but the candle itself closes above the 20-period moving average. This candle right here is our 0 candle, meaning this is 1, 2, so on and so forth, pushing up. So when we're using our measuring tool, we're starting from candle 1. So we go over here, we grab the measuring tool, start from candle number 1, we pull over till it says 10 bars, and that is right there. As you can see, it now says 10 bars, which means I'm looking at this candle all the way over to this candle. And in this area, I want to see if I find a 38.2% candle. So do you spot one right now? Or one that could be the case? Obviously, we have to check it with our Fibonacci tool, but do you spot what could be a 38.2% candle? Hopefully you were looking right here at this red candle. 38.2% candles, as we discussed, can be red or green. So let's actually zoom into that candle. We know it was candle number like 8, I think. Let's actually count. 1, 2, 3, 4, 5, 6. It's actually candle number 7. So it's within our 10 candles from the previous most recent close above the 20. That rule is met. Now we just need to measure this candle to ensure that it's the 38.2. And there we have it. It definitely has a body. The entire body is definitely above the 38.2% retracement. That's all we need. So at this point, what can we do? We can place our actual position. We have a 21 pip ATR at this point. So we're going to place our position and enter at the close of that candle. We're going to have 21 pips below here, which is going to be 12 plus 21, which is 33 pips on our stop loss. And we are looking at a 1-to-1 reward to risk ratio. In this specific case, there is our 1-to-1. If I put a horizontal line here, you'll see that this trade did in fact go on to hit targets and did not get stopped out over here. So with that being the case, we have another example of a winning trade here on the bullish 20 EMAR strategy. So hopefully at this point you have a good idea of the rules of this strategy for a bullish example. We're going to go over more examples a little bit later on, but first what I want to do is move on to the next video and show you guys examples and the rules for the bearish 20 EMAR strategy. I'll see you guys in the next video.